Good afternoon, everyone. It is Saturday, February 24th, and we're going to go into the CoT reports and high-level review. Just a quick reminder that derivatives trading is inherently risky, and past performance is not indicative of future returns. With that being said, we'll start off here with the S&P 500. The equity indices at the moment aren't giving any strong enough signals for a setup on this data alone. The ones that we're getting the best signals on currently are going to be the 6J, so the Japanese yen. The 6N is kind of mixed, but getting closer to an outlier, which is the New Zealand dollar and then Bitcoin. But we'll start with the SPX, since most people will trade the equity indices. We can see that commercials added to their position before NVIDIA earnings. So we're still watching for a markup and then a distribution against that markup. We did get a nice markup on Friday, right to the peak we were looking for. And so I do want to congratulate a few of our traders, some of them that saw that, and then some of them that traded that as well. I know one of our longer term traders, Ilhan, caught the short at the high a few different times, which was perfect. And it was a very high odds setup. Big areas to watch on the week ahead are going to be 50.59 and 50.17. For the first time, our low end of our range is over 5,000. This just shows when they bought the position last February, March, April, and May, and then the markup and the distribution against that, then the position acquired, the markup and the distribution against that. This is now the position acquired. We're seeing that same markup here. Again, you can follow the flows. This is how you can actually identify real inventory instead of trying to take a guess on where it is or who is positioned where. This is one of the tools. We have many for our subscribers and our traders that show all the different participants, or at least the ones that we map in the market. But this is how we can see where they actually are positioned. This was our peak zone we were looking for, and just a very high odds, great trade. So congratulations to both Mehdi and Ilhan and Screezer in there. The NQ, again, same thing. As far as what we're getting, commercials have been getting very short, and we saw some drops that they covered into. And then we're looking for, again, 18,143. This was mentioned on Thursday. Perfect short location. I think we're off by 1 or 2 ticks. And again, just right down. So that's exactly what we're looking for there. 17,943 and 17,717 are going to be the bigger levels to watch on Monday and Tuesday from a higher time frame. Comms did cut their short position a little on the drop pre-NVIDIA earnings. We could see that because this runs until Tuesday EOD. So we'll have to wait and see how they adjusted after the earnings. But now that that catalyst is kind of over with, which everybody was waiting on, we don't have any major catalysts this coming week, except for month end. And then beginning of next week, we get NFP, ADP at the beginning of March. So we're kind of a lighter schedule this next week. We are still near a 3-year max short position. Now, not quite there, not as good of a sign as we headed into the beginning of the year and the beginning of February. So again, not as big of an edge at the moment, although small spec traders are near a max long and added into that. So we could see a shakeout of those traders in the coming days. RTY. So commercials are adding to their position. If you trade the RTY, probably a better proxy to watch is going to be the IWO ETF, which is the Russell 2000 growth, for companies that are signaling where these moves are coming from. The reason for that is if you look at the IWO versus the IWO is up twice as much as the IWM. So growth sector within the Russell 2000 is what's growing at a faster pace. And so that's where you would want to pay attention to. We did mention last week that 2 weeks ago, our line was 1993, so down in here. That line did move up to 2003, and that was a very nice pivot. several times this week, and it held again. The upper edge of that pivot is 2041, and so we've been playing ping pong a couple times in between there. This will be the area that I watch on the week ahead. And again, for our subscribers, professional and elite, elite, we go through this each morning. Professional, we will post these as we go along. On the Dow, on the YM, there's commercials are still short. They cut a little bit of their position in the drop. The biggest news coming on this is the addition of Amazon into the Dow, and so it's going to make that a little bit closer to the NASDAQ or the S&P than it has been. And so again, these indices will have a higher correlation as we move forward. So this is going to be noteworthy. We did finally get the move that we had mentioned. I mentioned on February 4th. And so I've got to find, here we go. February 4th noted that the Dow non-commercials were getting very long. And so we'd look for them to get trapped. Comms are short, but we'd be looking for a move to the top end of the range at 39,200 or 39,350. Our high on Friday was almost to that 39,350. It was right into that zone. It was about 39.45, so we were off by 4 or 5 ticks from that high. That was a very nice, easy 200-point short on Friday for the Dow. Again, this is how we can bring these things in and plan these trades weeks in advance, because we can look at where the market is. We look at positioning on other factors, other segments, and other durations. But we can make these plans weeks out and know where the market is very likely to see inventory even at all-time highs, because even at all-time highs and above all-time highs, there's still inventory laying out there. So if you don't know how to identify that, or you're interested, please, feel free to come check us out. Now, to move on to the higher odds setup on the week ahead, the yen. And so this is the one I'm going to be watching the most closely. We are near a peak here. It could continue up, but if we look at how this is played out from the commercial side, when they got max long into July 3rd, we saw a nice push on the yen. Into November 7th and 14th, had a nice push on the yen. We are at that same level here. We've got our line in the sand. I will be looking for a move outside of this zone and into areas where I've got bigger levels marked, but I'm looking for a bigger markup against this long position, because we've seen this play out multiple times, and then you get the markup and the distribution into that markup. And again, this is how we can identify those moves. This should be a lower risk, higher reward setup. This recent lower high at 0069 will be kind of the big one to watch if we do get over 672, to really watch the reaction there. And the other factor to consider is the finance minister said that the Japanese government would intervene in the Forex market to stabilize their currency. And so while we don't want to catch a falling knife, we can identify what is playing out, and then we know the major levels that we want to trade against. This is probably going to be my top setup I'm watching for in the week ahead. Second is going to be the New Zealand dollar. And we've got non-commercials very long, commercials very short. We haven't seen this in over a year, which gives us, I do have data that goes back 3 years on this, so I've been comparing there. We're about 37% of the way to a 3-year max short position for commercials, but non-commercials are very long, which they could get trapped in this. So when they had a short position before, we dropped, then they built a little long position and distributed, and it was very small. You can see that here. We were very small. When we built the bigger long position, that was this, a bigger markup. Now we have a short position that we haven't seen in a while. I would look for 624 or 620 as kind of the zone I'm going to watch immediately. That would be my positioning for this, maybe around 6225. And I'd look for lower. If they keep pushing, they're going to build into that short position, the same thing they do here. And I will still wait for my setup to present itself. Last but not least here, Bitcoin. So we don't have quite as long a data since Bitcoin hasn't been traded from a futures perspective. And an equities perspective for as long. So we don't have as much data, and it is a thin market. However, the same things play out. And so we can see right now, comms are getting close to their max long position. We're at a 96 rating. Duration scores are pretty low. And so that tells us we still do have room we could run. And non-commercials here are getting very short, which also means they're getting trapped, which could be our fuel for the upside. And so the way this has played out before, when they went long, we had the markup. We did the video on this and explained it. That was the liquidation into the ETF decision. Then the rebuild, $8,000 lower. And now we're getting that same markup. So this puts in that all-time high, until we start seeing that actual distribution taking place. There isn't the major catalyst of an ETF decision out, laying in front of us. And so as we saw this play out for multiple months on a markup, we could be seeing the same thing, which brings the all-time highs into view and into a possibility. We'll continue to watch and monitor this, but for any crypto traders out there, this is one of the things we can use, as Bitcoin will lead the way for the market. So I hope this helps everybody for the week ahead. Feel free to check us out at Sticks Trading Academy or join our Discord. Very excited to be able to do this for you each week, and hope you guys are trading safe out there. Have a great weekend.